Welcome to Prime Suspects for your weekly insider's look behind the counter of Prime Sports. Alongside Adam Bjorn and Prime Sports co-founder Joe Brennan Jr., I'm your host, Matt Landis. Today's topics: the football weekend that was for Prime, 2 U.S. senators call for DraftKings and FanDuel to be investigated for alleged antitrust violations, and Robinhood eyes a move into sports betting. Kicking it off with the latest from inside Prime Sports, Adam, I understand it was a big weekend for you beyond the college football and NFL chaos here in the United States. So tell us about how you were enjoying this past weekend.
I didn't even realize I was playing NFL in college this weekend. I was too busy about a more important thing down in Jamaica with the race that ended up the most anticlimactic thing in my racing career in history. Yeah, went down there, had the horse primed, everything was ready to go. And then they put him in the stalls for almost 7 minutes, mine and another horse, and I think they just fell asleep. So by the time they opened those gates, my horse was napping, missed the start, and I knew within the first 5 seconds that it was all over. I guess the downfall of knowing a sport or knowing things very precisely with the speed of the track and the way it had all gone all day. Again, we'd be with the jockey in the parade ring at the first part, pre-race, had it all worked out, all planned. And then, a horse won it running, 138, almost 139, which is a local winner, a local race time. The 2 other big horses that come into the race ran second and third. But again, 9 days out of quarantine, we knew they were going to be tiring at the end. But yeah, for me, one of the biggest busts I've had in being in, again, primed, ready to go, and just didn't show up when it mattered.
An unfortunate result, but hopefully a fun experience nevertheless with that getaway over to Jamaica. And bringing it back to football, which is top of mind for a lot of this audience. Adam, I caught you mentioning maybe your horse being napping at the start. The Philadelphia Eagles, as a 2-touchdown favorite, were napping at the start of their game, trailing 3-0 after one quarter, if I recall correctly, and almost snoozing at the end of that one as well. And I bring that up because last week, as a lot of people have heard, there was a bettor that wagered $3.1 million on the Eagles on the money line at Circa. And after one hell of a sweat, lives to cash in on that massive ticket. Joe, would love to bring you in here for your point of view on the risk a lumberyard to win a toothpick type of approach from your side of the counter.
We have a few guys like this, not to that extent, but guys who they tend to come from a financial background. So their attitude is if they can make 8 to 10% on their risk capital overnight, that for them is a good trade. So coming in to bet 3 million, and then what was his win? I think it was like $250,000 or something like that.
I think it's somewhere in the low to mid $400,000.
That 3.1 million at risk for that low a return in betting is kind of like, ugh. So I did find myself, although a lifelong Birds fan, there in the fourth quarter thinking the Birds could take a loss. They're going to win the NFC East. Anyway, they're not going to catch Detroit for the 1 seed in the conference. It would be really cool to see that guy take one in the shorts and serve as a kind of illustration for all those guys out there who are starting to find their way into at least the regulated industry, who like to consider themselves really big game sports bettors, but they won't go near anything less than like a minus 250, minus 300 money line favorite. So sorry to see that Derek had to take that one, pay out on that one, but sounded like he was resigned to it and we're doing a good job of managing it. I do wonder, though, about how he was talking about managing the risk across multiple state lines. If he may have been suggesting that they were going to violate the Wire Act because they took the wager in Kentucky, and he was talking about getting buyback in multiple states. You might have wanted to clear that with the compliance department before he said that out loud. But other than that, that's the way the industry is going here right now, particularly in the VIP sections.
Just to jump in, because that's the same issue that we run into at Prime is New Jersey versus Ohio bets. Balancing in other books that you own in other states, I imagine that's perfectly fine, knowing that you're going to pay out here, but you're going to collect here, because at the end of the day, they're all the same operation. They're all the same bottom lines.
Yeah, I'm not saying that he did anything illegal. It's something that doesn't sound like it doesn't sound good. I'm sure because Nevada compliance people tend to be the most conservative of all. It's just the suggestion of like, well, wait a second, you're offloading your Kentucky bet with the action that you're taking in Illinois and Illinois. So It's just something that you got to be careful of in our fragmented state by state regulatory environment. But other than that, I don't really think anybody's going to lose any sleep, and certainly not the $3.1 million money line better.
And Adam, if we are to set aside the various markets involved in this for a moment, I would love your point of view on Circa's risk management when it comes to taking the bet, which was reported as being their biggest ever, and then aggressively moving the money line in addition to anything they may have been able to do in game to offset the risk they wanted to offset, but also lean into the risk where they were willing to take it.
Yeah, for me, I would have just taken the bets and let it ride until at least the live. I wouldn't have been looking to get in buyback pre-game. These are the kind of bets I think are the great opportunity if you're really trading well and you know you have that live liquidity. There's probably opportunities to be able to turn that around and make more value out of it. If that's your number at the beginning of the game, then ideally you should be there to be able to take any kinds of bets. Again, yes, it's a big bet. I think it might be the only reason many people were actually watching that game on the weekend, as boring as it seemed, with a 13-point spread. And then, like Joe said, there was probably people seeing the halftime score and then tuning in as it got towards the end of the game of that nature with that headline. But it's bookmaking. Take the bet, move the number, know what you're comfortable losing or exposing in that spot. It may be a customer that had already bet that kind of bet a couple of times on a smaller level and he was just leveling up, and they don't mind paying him in that nature as well. That's where knowing the information behind the scenes versus the headline and the talk that's publicly spoken, there's so many nuances and variations to how this would have happened and how it went down. But ultimately, again, they took a really good bet. It shows that, anyone coming into the space, if you're looking to bet $3 million to win $500,000, that's the place to go. We'd like to be taking those bets as well. And that's ultimately where, I think the fan kings of the world get a customer like that. They win 3 or 4 in a row and they're like, oh no, out you go. Whereas you can let them win 4 in a row. It's when they lose that 5th one that ultimately you end up in front. And that's just part of the game and nature of where I think the dynamic is really lost in these non-bookmaking recreational entities, whatnot, of just looking at this completely different rather than just the way bookmaking has been done for 100 years.
Yeah, and let's be clear, like for all the drama about, Derek saying like, oh yeah, I had our guys trying to like write back and, business on the other side in the other states and everything like that. That bet was backstopped by penny slots in his buildings in Las Vegas. If we had a couple of casinos full of table games and slot machines, we could be just as adventurous on stuff like that. They do a good job. Derek does a good job. Circa does a good job of cultivating their brand, cultivating their image, but they have an huge insurance operation going on behind them in those buildings with those casinos.
Certainly plenty of drama as far as Circa was concerned for that Panthers-Eagles game. But in the spirit of this segment being our look inside Prime Sports, Adam, any noteworthy action on your end on Carolina-Philadelphia at Prime this past weekend?
No, nothing of note. But again, I'm looking forward to getting into Kentucky and looking for that customer and inviting him in the front door. And, maybe he's got $6 million. He wants to lay it in Circa only 1/2, or maybe we're better odds at the end of the day. But yeah, it's nothing major on that game. For us at Prime, it was very good NFL, very bad college football, mainly on the live stuff in the college. So, all in all, it was a quiet weekend. It's that time of year where you get the really ramped up Thanksgiving weekend. Everybody goes quiet, I think, in the sports betting space a little bit to get to Christmas. And then the bowls and the playoffs sort of ramp up everything again.
All right, well, from the action between the lines this past weekend to some turbulence off the field, we'll shift our sights now to our water cooler segment. A tough week for the industry with another negative op-ed by former U.S. presidential candidate Andrew Yang in Newsweek, and news that 2 U.S. senators want DraftKings and FanDuel investigated for alleged antitrust violations. A jump ball to you guys here. What are your thoughts on the potential merit to an investigation based on antitrust cases you've seen in other industries?
Yeah, so I'll take this one because I was also involved in the FTC's consideration of the FanDuel and DraftKings merger back when it was just DFS. I think then they had more of a case for more of an antitrust case because their combined unit was already, the 2 companies separately were already eating the DFS industry alive, not just in the market, But with a lot of the ancillary stuff, they were skewing the lobbying towards them. They were the only ones who really had resources to pay for lobbying. DFS industry also suffered from a Fan Kings hangover. Like Fan Kings would get in trouble, like in 2015 when they were both tagged up by the New York Attorney General's office. But whereas their payment processing didn't dry up, their capital didn't dry up, their investors didn't dry up, that their bank payments, all that, everybody else in the industry, and at the time I was in the industry in a DFS startup, we all experienced nuclear winter. You know, everybody from PayPal to payment processors couldn't process Visa, MasterCard, anything, but those guys still did. And it was because of their collective size and power that they wielded. The only reason they tried to merge was really they were just trying to stay alive. Everybody kind of forgets the fact that they were both on shields prior to PASPA being overturned. I think it was less of a case of being able to make it now for the most part. I will say that it would be interesting to have a look at the fact that, and we've seen the result of it, where early on when states have legalized, you've seen the lobbying from the Fan Kings faction go in there, and they've just tried to be very, very clever, like trying to convince states that, well, you know, in order to qualify for a license in your state, an operator should have a license in like 3 other states or 5 other states. And they were convincing lawmakers to do this, you know, and it was making it hard for smaller companies. Now, I don't understand why a state lawmaker would do something dumb like that, because what they're essentially doing is they're shutting the door to anybody starting up within their own state, right? If you're in Kentucky, you know, what do you care how many licenses people have in other states? If they're a Kentucky-based business and they want to start up there, give them the opportunity to it. It's an irrelevant requirement. You also saw that they tried to be very clever when it came to lobbying in places like New York State, like limit. The big thing was the scarcity of the number of skins. They've wanted to have states limit the number of market entrants. And then they got met in the middle by Governor Cuomo and his administration. They said, like, well, if we're going to do that, we're going to bid this up high on the tax rate. And they got suckered into it. They're actually willing to pay higher, as high as 65%. It's at 51% of their gross gaming revenue they're paying in taxes. And now that's metastasized. It's metastasized into Ohio and Illinois, and other states are looking at it as well. So there's maybe a few things that I think Senator Lees and Senator Welch can quibble with about this, the FTC could look into. But you know, nowadays those guys are mostly competitors. They don't seem to be engaged in any kind of cartel pricing or cartel advertising activity. They just seem to be mainly pointed towards one another.
So let me jump in there, because again, if they want to point guns at somewhere and take a shot, they should be going after the leagues and the data providers. They're the ones that are working in bed with each other. NFL owning a piece of BetRadar, or the NFL owning a piece of BetGenius, and the other leagues owning a piece of BetRadar. I mean, for me, all this does is, you know, the simple bet acquisition, things like these where they're trying to roll up and take all these players out of the market. It just opens up space for new players to come in and sort of slot into those places that they're trying to eat up. I don't think there's anything that they're like colluding in a sense of trying to, you know, get processes or anything, those things sort of blocked out. I think there's other targets here. And I think ultimately it's showing a lot of people that have actually no clue about the industry, and they're really trying to just build up the unregulated part of the business by stifling the regulated aspect. So, you know, you read these things and you just, you know, it just gives you a headache, that the bureaucracy and bullshit that you're kind of up against from people that make these decisions and ultimately are just trying to make it harder for businesses to operate. The whole idea of why this new president is supposedly coming in is to make business easier and more available to everyone, and then sort of to compete. So I hope the others sort of fall in line and see that as the opportunity here, rather than trying to just take legs out of people trying to build businesses.
Well, on that point, Senator Lee is being eyeballed as a potentially for a position in President-elect Trump's administration. And I don't think a senator from Vermont is going to get too fierce about this. Now, I got to be careful, because those guys are just down the block from me here in DC. So I have to play a little nicer than Adam. But I do think Adam's correct that, you know, there is a potential looming problem when it comes to things like data and content, and the fact that we've got data suppliers saying to us that well, in addition to paying our extraordinarily high fees, we want a percentage of your gross revenue. And the other thing is we want you to take some of our other products that you don't need, don't want, or whatever like that. So that's been a persistent fight. They just haven't risen to the level of public awareness that the two operators have.
And the other comical aspect of these articles, I mean, if you go into the weeds a little bit, and you see the part where they're saying recent woes, an data engineer suing him for $250,000 or a Massachusetts fine $1,000. Like, ooh, give me those woes, please. Like, if I'm DraftKings or something, like if that's my biggest woe, like you're in a pretty good spot.
Well, I mean, one thing that Adam's getting to see now that he's a brand new American here is that, the pile-on effect in politics. Like when somebody goes down, everybody jumps on top and every little thing. So, I mean, yeah, I expect that for these guys. The one thing I thought was novel was that they were trying to say that they were using the Sports Betting Alliance as their vehicle for antitrust activity. Well, they've got two other companies in there with them in Fanatics and BetMGM, who are their competitors. So are they saying that they're trying to use that as a vehicle to beat up their own competitors or their own alliance members? So it's a high profile thing. Everybody's having a good kick at those guys. God knows we do, right? But I think it's less of an issue than it was several years ago. As long as state lawmakers have finally learned their lesson and have stopped listening to everything that the Fan Kings lobbyists tell them about what they need, what the qualifications need to be for people entering their market. I'm talking to you, California and Texas and Georgia and Minnesota and places like that.
All right. Well, picking up on Adam's point about recent woes, I'm wondering if there might be some bigger woes around the corner when it comes to some potential challengers in this space. So getting into our look ahead segment for this week, Robinhood is reportedly eyeing a move into the U.S. sports betting sector. Joe, would love to get your thoughts first here. With an installed and engaged user base, do you think there's a case to be made for betting adjacent products like Robinhood or prediction markets like Polymarket or Kalshi to capture any meaningful market share in regulated sports betting?
I'll use the example of other adjacent brands like ESPN or Fanatics or Barstool. Being adjacent is not a guarantee of anything. Obviously, there's a lot of frothy enthusiasm regarding, the notion of prediction markets coming out of the presidential election. But I mean, you're talking about a singular event with a very singular result that had an extremely long run up to it. Even though those guys were only taking contracts for like a couple of weeks, it was an event that was really long in gestation. And as a result, had a lot of time to build up liquidity and interest and everything like that. So it's a very different than then being the sports betting business. You go from like singular event that had a run up of over a year or so to daily events. I would say there's not a whole lot of Robinhood's current product that translates well to the sports betting market, other than apparently having a lot of people in their database who have deposited real money with them who trade. But they are trading stocks and futures and cryptocurrency. They're not doing, there's no Apple versus NVIDIA game today that they're betting on or anything like that. So it's a very difficult transition for them to make. It would be very much against their current DNA and culture. The other thing is I saw some of the reporting on this suggesting that really what these guys would have to do is be in essence an exchange. And we've already seen there's, been a few entries into the exchange model here in the United States, and it's a difficult road to hoe. Ask the guys at Sport Trade, ask the guys at former Profit Exchange, now Profit X, how that kind of went for them. So while I'm sure there's a lot that Robinhood could do because they have a lot of cash on hand, they're obviously an innovative company in their space. Again, there's not a whole lot about their current business and their current product and their current platform that translates well into sports betting.
And Joe, as you mentioned the exchanges, I know it's been reported that if Robinhood enters the market, there's a suggestion that M&A would be the only viable option. Do you see any potential targets for them beyond some of the exchanges that you just touched on?
Well, there's this company in Cherry Hill, Prime Sports. Awesome. No. Yeah, I mean, that's not reporting, that's speculation. I think like one or two of the articles, they pointed out that, how Fanatics acquired PointsBet in order to get into the sports betting business, but also pointed out that Fanatics acquired PointsBet to be, 4% of the marketplace? I don't imagine that Robinhood, and more importantly, their investors, since they're a publicly traded company, and this was all occurring during their first investors day, realizing they can see the numbers on the other companies that are in this marketplace and how much capital has to be sunk in order to just get into the business, let alone try and get a reasonable foothold in the business. And they would be very far behind. So again, I'm not cheerleading against Robinhood. I have an account. It's more for my son than it is for me, so he can play around and learn about the equities marketplace. But again, between the costs, it would be such a radical change from their current DNA and not a lot about their current product. Even if they acquired a company, let's say if it's going to be an exchange, they acquired Sporttrade. They probably just got Alex Kane, really excited. Then what? I guess is the big question. Then what do they do? Then do they pump $250 million, $500 million into them to try and get up to 10% of the marketplace? Maybe. Alex is getting really excited right now. I wonder if that's really a compelling option for them right now, given their position.
Adam, want to get your perspective here as well. And as a jumping off point, how would you describe your thoughts on the possibility that these betting adjacent products do expand the market size for sports betting to draw in new players?
Yeah, I'm actually of the different take on this one. I think they're in a really strong spot if they do it smart. The problem is everyone else hasn't done it smart, even Sporttrade. I mean, you look at their contracts, they did 300 million contracts on the election. I mean, that's probably more volume that Sporttrade's done in the last 6 months. Polymarket, the other one, doing approximately 3 billion. Obviously, they've run into some issues with the authority since, but from what I'm seeing, Robinhood and Kelce and that, they're looking at it from, the aspect that they don't have to go through the licensing. So there's a cost that doesn't exist. They're looking at the sweepstakes model in that sense. I mean, we saw 20, 25 years ago, a company, WSEX, that were offshore doing the buy sell, just like the stock market. You could do the Super Bowl every year. You could do, obviously, the World Cup run down in 2026 to really sort of walk into something that makes it worthwhile. Everything today is the customer acquisition, which they already have. They have the attention, they have a brand, and they have a database. So if you just take small steps and build into it, they're definitely in a good spot to do something here. Now, when we look at other companies that are dipping their toes into sports, you wonder why bother? They're doing, less than 1% in their own house in sports versus other trades. And this would be the same for them. So is it that they're looking to acquire customers that are in sports betting that can now go onto their platform and buy, sell futures on who wins the Super Bowl in February, or the World Cup in a couple of years' time, or the NBA championships, the World Series, things like that. So I think they're in a strong spot to dip their toes in it, build something out if they do it correctly, and they don't need to throw a whole heap of money into it because it's just there. It's on the side. It's the way they've added crypto. It's the way they've added everything else. At 3 o'clock in the morning, you want to trade something, you just scroll through the whole menu and you just have a captured audience. So I think there's something there for them if they want to go into it. Do I see them as a big threat or anything in that sense? No, because like Sporttrade and those others, they need to be niche anyway. They're not going to offer every single game and the 150 children markets under it. There's just no viability there. But definitely for elections and major, and as Joe said, they're trading futures. Well, sports betting has a bunch of futures that get traded every year. So they can just add that in, and it's just another vertical within something that's already established. It costs them nothing to ultimately add that.
I think the thing that you're right about is that they're already there and they're already scrolling through all right, well, what if they have a certain percentage of their customer base? It's like, what do I want to do today? Do I want chicken? Do I want fish, or do I want beef? Do I want crypto? Do I want futures? Do I want equities? Do I want sports? Yeah. I mean, they're already there. That's the thing that allowed FanKings to take off. I do think though that all right, well, what percentage of the current betting marketplace is the futures markets? You're talking about for sports betting, you're talking about a subset of a market. The other thing I'd say is that, even in the highly liberalized betting markets, like the UK is a great example. Like UK's had a number of these, sports betting stock exchanges, if you will, over the years. All of them have ended in tears or worse. Now, that doesn't mean that it's disqualifying because, I say that, but also at the same time, social sportsbook was a disaster for so many years. And now they've managed to put old wine in a new bottle, and it's sweepstakes sports betting. And now suddenly it's got an audience and it's got interest in it. So, certainly nothing I can say. I don't have a crystal ball or anything like that. I just think it's going to be a very, very difficult pivot for them right now, with the added pressure of being a publicly traded company and, what they do with their money, what their strategy would be. But hey, we need more innovation. The one thing that we do need, I think everybody would agree, is we need more innovation in sports betting, because right now I think we've probably played out everything looks like an Excel spreadsheet betting into the markets thing. So new user interfaces, new approaches would certainly be welcome.
All right. Well, there you have it. Different perspectives from Joe and Adam to wrap up this week's show. To the audience, whatever's in store for betting adjacent products, thank you as always for making us a part of your week. And we'll catch you next week right back here on Prime Suspects. Thanks for listening to this week's episode of Prime Suspects. Register for Prime Sports at primesports.com and download the Prime Sports app. You can follow us on Twitter at Prime Sportsbook, at Joe Brennan Jr., and at Adam Bjorn 2. You must be 21 or over to play on Prime Sports. Always bet responsibly and within your limits. If you or someone you know has a gambling problem, call 1-800-GAMBLER.